Aloha and welcome to Java. Thank you kindly for joining me. It's August 22nd, 2024. It is Thursday. I thank you all for being in the discussion yesterday in Discord. If you were there, it was great discussion. Had a lot of things that came forward. So with this, today we are back on the grid, watching what is coming ahead for us. And with this, I would like to go ahead and start in with what's going on in the markets in the United States. So starting with the MMR as our favored risk indicator, of course, right around 240.4. So not a lot of movement, but there's a balance happening in here. Talk about that in a moment. Fear greed indicator heading back towards greed. Right now, neutral area. It's drawing in more retail traders. This is not big money. Okay. Right now, we've got the markets, hedge funds staying away from stocks despite the recent rally. This is according to Goldman Sachs. Also in the numbers, what we're seeing is the larger money, the big money as we call it. This is insurance companies, pension funds, hedge funds, are all moving to piles of cash, so to speak, which is a different position. So the typical balance between stocks and bonds or equities and bonds is changing. They now have increased the cash piles in general that they're holding. So this is a very telling sign. It is a warning flag going forward. Okay, so with this, we're watching immediately the 10-year yield, which is stable at the moment. They're talking about the rate cuts coming in September, but right now, 3.83. Below the levels that they've gone, it is slowly coming down. But the big story is the dollar. Relative dollar strength has pulled back significantly and is continuing to do so. It is on a downtrend at the moment. So when we get this means that prices will go up as the dollar cannot afford to purchase as much. It's losing purchasing power. So stock prices also going up. So we've got stocks as well as futures in agreement for higher prices, even for oil at the moment, which I think might have a bit more of a pullback. So with this, it's dropped volatility and the safe haven of gold for the moment. So with this, we've got initially, it looks like continuation is the probability. With the cuts being assured, we are getting more news Friday. We'll be watching that. However, I think that is going to be a sell the news event. So it looks like we're going to be a little more positive for today. Probably a little more chop or leveling off toward the end of the day. And Friday could even be a sell the news event going into the close. Why do I say this? We've got volume absent. So all of these trades and the price action that is going on is without this big money in here. So on lower volume could be higher volatility and will also show more correction is typically what happens. So just urging some caution there. What have we got with the calendar? Prior to market open, we're getting initial jobless claims. Again, more to talk about that. We're getting PMI and then also home sales. So yesterday we got the job creation numbers were slashed by over 818,000 numbers. And this just solidifies the fake numbers that they're coming out with, and this is what they're making their decisions on, is the data that is not correct. Okay, so moving forward, we know these reports are false, but they're using them as an excuse to make their decisions moving forward. So again, we've got the king dollar's crown is slipping, basically dollar losing that relative purchase power to the other currencies. So as this is happening, the other currencies in relation are gaining strength. This includes the yen, the euro, and the other tallied in currencies, so also the British sterling. So with this, we're going to watch some other imbalances and watching that carry trade. The currency valuations and trades. And if you are a currency dealer, please leave me a note below. I would like to speak with you about this. But the currency trade globally and this imbalance is one other way, aside from their balance sheet, that they can basically manipulate what is going on with these markets. Okay, large amount of debt, large amount of the dollar denominated assets being adjusted through the dollar strength. Okay, so these are the reported earnings we're expecting today. Going over to our studies. So we've got global stocks on the brink of an all-time high. Now, this is not because the companies, again, have become higher value or producing more. What is going on here is currency devaluation. With this currency devaluation, again, stock markets go up. Okay. Like to go into this a little deeper. We've got Germany again reporting their economic downturn. This is very bad news for the euro because they are the powerhouse for that sector. Okay. Another story we've got coming out. This has been huge with artificial intelligence as well as cryptocurrencies. They both use major amounts of power and infrastructure. So this is the picture of data center. They both would use these in different aspects. Now, artificial intelligence would use more of a data center model, while cryptocurrency is a bit more of a processing model. Slight differences, but they'll both be using major amounts of power. So the reason I'm bringing this up is we've got a shift going on, and these companies are looking for basically old power stations that they're looking to revamp, remodel, because they need massive amounts of connections, and this includes strategic locations. Before any of this can grow, before any of the mega caps, mega companies can grow, they are looking to this sector. This is the base model, basically what you would call the picks and shovels that must grow first physically before they can move forward. Okay, I want to bring up a couple of other things that are going on. The debt market behind all of this, and where we're watching advance rapidly. Okay, so this is a picture of Greg. If you don't subscribe to his channel, you absolutely should. I believe most of the people in here already do. I'm leaving a link in the description below so you can find him. This is Greg Manarino. He does an excellent description of what is going on and has a very good handle on exactly what this is. So we've got, this is a graph right here. It is productivity versus the hourly compensation of what has happened. This also, coincidentally and not by mistake, is 1971, is when the Nixon shock happened. Basically, in short, the summary is that the US dollar was taken off the reserve balance with gold. They cut the ties to gold. So as a reserve currency with no ties, it became 100% politically driven, and that also affected hourly compensation, wages. This is tying into what we're seeing today, why jobs are so important, and this, I believe, is going to kick off this recession that we're looking at. So moving forward, we're going to have vast inflation coming into play, even with this recession, and it's basically going to be the driver of things moving forward. Okay, so with this, I want to mention a little bit more. While we've got everybody paying attention to this gal here and her concerts, it's a very temporary thing. She's not going to affect your life moving forward unless you're directly related to her. And yet, all of the mainstream media, everything pushing to look towards what she is doing and really what is going on in the background. First, behind the debt market. Second, we've got these real wars going on. So this is Air Force families and this is military families in general. They're being told now to prepare for catastrophic events amid the shift to potential Pacific conflict. This is not the Middle East. We're in wars on multiple fronts. We spoke a bit about this yesterday in the Discord group, but this is taking resources and also it is the flag that is happening. So with this, we've also got recent news, a Greek oil tanker also adrift and ablaze. And this is because they're saying basically Houthi attacks again. shipping oil. So again, another oil tanker. And I believe this is what is pushing oil up this morning in trading. Just ridiculous things going on here. So we've also got, we were talking about the aircraft carriers yesterday. Second aircraft carrier has arrived in the Middle East. And we've just got this continued conflict. Now they're talking about peace treaties, but turning them down, not agreeable. So with all of this turmoil, all of this unrest, really what we're looking at is more inflation going forward. They send more war packages. And if you're here for more than just the stock market, I really encourage you, join the Discord group if you would. Again, I know I'm pumping that, but it's because it's much easier platform to give immediate updates, and it's also more than just myself as a source. So it can be all of us together. So with this, thank you for all of this. If you would like to support my late night or early morning work here, you can buy me a coffee. It's a new platform, less than YouTube. I'd like to move off this eventually. So I'll leave a link in there as well. Thank you all for all that you do for this. And until I see you again, my friends, stay free.